Hello everyone, how are you? How are you getting on? So today, let's talk about the elephant in the room, SVB, sort of Silicon Valley Bank. Okay, so this is the Silicon Valley Bank, the SIBV, and we all sort of, unless you're living in a sort of what would I call it, a cave for the last 3 or 4 days. It's been all over the news. So on Friday, the Silicon Bank Valley sort of went under. So that's there. So on Thursday, the market opened and it gapped massively down. And then on Friday, look, it continued and then it ceased to exist on Friday. So basically, what happens is a bank gets her money and it invests in bonds. Okay. Now, what happens is the bonds are government backed. So which means then that basically you have a thing that's backed for by the government. So that's it. Now, the problem is with those bonds, generally bonds give you 5% a year, which means then that guaranteed whether the price of that bonds goes up or down, it means that everything is sort of covered with the bank. Why? Because the government is giving you 5% dividend or 5% interest. And what they do is they sometimes give you a dividend yearly, just an added little bonus. So sometimes you get slightly more. Now, what happens is that the market drops. The stock market drops, and it means then that the underlying equity that you had there is, yeah, it's okay because you still have the bonds. Now, what happens then is if people then withdraw more money than the actual bank has, it means then they have to start liquidating those bonds. Okay, so which means then they have to free up cash because they've invested the money that you've given them into the bonds, which means then the bonds are down massively as well, which means then they don't have enough money then to cover the initial investment people have given them. And that's theoretically what's after happening with SVB. Now, yes, it also has um, a big crypto staking, which hasn't helped either. So all in all, people have come now and asked for sort of their withdrawals, and they're not able to action this, and that's the problem here, and that's what's after happening in a very broad sense. What's after happening here with SVB, so the Silicon Valley Bank. Now, what effect is this having on the rest of the market? So we can see here that it was slowly moving downwards. It had a high there of $348, and then it went down to $260, which is a pretty significant drop in that particular. What's that, about a 30% drop? Will it? Will the ruler give it to me here? From there down to there, 23% drop. Okay, which is which is pretty significant in the space of uh 2 weeks. Okay, now then the news comes out and shareholders started selling off their equity, started selling off their shares, and then that jumped down. And then all of a sudden, then we had a big spike. We had a huge spike in what everyone when everyone got the news. So that's where then it finished up on $104. So that's anyone who invested at the high here has lost everything. So anywhere you invest anywhere, you now you've lost everything. So two things were going to happen. So the the ECB, or not the ECB, the Fed have come out and said that they're not going to bail the bank out, which meant that over the weekend we were in that sort of limbo that we are at a point where, look, there's a bank about to go under. Now, can anyone remember the last bank that sort of went under, or the last huge one was the Lehman Brothers? So this is the second biggest bank behind Lehman Brothers that's going bust. Now the problem is that if this is not bailed out, there's a huge problem because in Silicon Valley, the banking system has insured up to 250,000. So that means that any company, because this is companies that are invested in the Silicon Valley. So this is mainly all the tech companies there, startup tech companies established. So they have insurance of the 250,000. But a lot of these companies have invested much more money than 250,000. So in theory, so if this is not bailed out, just imagine you're working at some of those companies that have money in the Silicon Valley Bank. All of a sudden, then you go to pay your wages, you go to pay invoices, you go to pay suppliers, so on and so forth, which means then that you now have a liquidity crisis. You can spend 250,000, but it's a one-off. But just imagine you have, say, 10 million in that account. All of a sudden, then you cannot access that money anymore, which means then that companies will go under. Companies will have their money in one bank, and not all companies will have spread their money over three or four banks, which means then that you can't pay your employees, which means companies will go under, which means jobs unemployment will go up, and this has a cascading effect. Now, that's what's happened. Then on Monday morning when we woke up, it said that HSBC had bought the European arm of this for €1. Okay, so let's have a quick look at HSBC. So as we can see, HSBC over since Thursday has actually had a pretty dramatic drop down as well. Not as big as SVB, but again, from Friday there, we've had a jump of down to the low was 9%. But a little bit of a pop up today, which is 1%. But we've had a pretty big drop. It's now gapped down twice over the last 3 days, and that's Europe. Okay, so again, we're having this knock-on effect. There's another bank that is seemingly being seized by the government, so Signature Bank, and I believe there's a third First Trust or something. I cannot think of the third bank. So which means then that this now is having a knock-on effect with these other banks. You have a point where people will start going to banks and taking their money out in the likes of America, which means then that will have a huge factor on the rest of the banks. I know when it happened in with Northern Rock in the UK, they actually closed the doors and told people you're not getting your money back. It could come to that sort of stage. Now, obviously, we don't want to because that's panic, and panicked money has never done anything correctly, if that makes sense. So let's pop over to the major US banks and see how this has affected those. Now, if we look at Morgan Stanley, something that we have traded pretty dramatically over the last year and a half, Morgan Stanley has had one, two, three pretty hectic selling days. So if we look at it again over the last 3 days, so from the Friday down to here again, we have a 9% drop. Down to the low was actually 10%. So again, this is after taking 10% off the stock prices of the likes of Morgan Stanley. Let's have a quick look at Goldman Sachs. And we can probably see the very same. Again, that's 11% off Goldman Sachs. And finally, JP Morgan. Now, JP Morgan hasn't been as badly affected. So from here, so Thursday down to the low again was 8%, but up to where price is right now, it's only 3.5%. So we are getting a huge knock onto the likes of these investment banks. So this is something where you guys sort of have a look at this. Is there a wider problem? Do we think that we're going to see more downside across these banks than upside? There's a horizontal level there that's bounced. We can see that the pre-market is actually at 133 rather than 131. Okay, so we have had a little jump overnight this is fine. Why is JP Morgan up slightly where the other ones are down? Okay, the next thing then is, do we think there's more downside in this in the US? The likes of the other banks, the likes of the Wells Fargo's of the world, etc. Now, the likes of the Wells Fargo of this world, they've never been, what would I call it, the most ethical of companies. Now, if we head over into sort of Europe, so we have Africa, we have sort of BNP. Again, similarly, we've had a from Thursday, we've had a pretty big jump down again. So it's not just US. It is affecting other parts of the world as well. 12% down. UBS, Europe, again 10% down. We looked at HSBC already, 9% down. Bank of Nova Scotia, Thursday, there, that one went down about 7%. At the minute, it's 4% down. So not as badly affected as as the likes of that. So the moral of this story is that do a little bit of research into this. This could be an event for our clients to actually have a look at this and see, are these banks following the criteria? Is the criteria that was put in place after 2008, is that flawed? Is that stopping clients from making money? Or is that actually helping businesses not to go under? Secondly, do we expect more downside over the next weeks or the next month? If we expect more downside, wouldn't this be a place where we could actually potentially get in and place a couple of shorts if it gave us the right technical setup? Or do you think that there's a 10% bounce on the likes of these? Do you think these banks will recover and continue growing? If they are, you've now had a discount of 10% on these stocks at this present moment. So there's a lot to ponder at the minute. There's a lot to get your head around. So what I would do is delve into some of the finer details, find out what's going on. Is this a systemic problem across the banks in the US? And how are the governments going to help it? Are they going to bail these banks out, or are they going to let them go under? Now, if they let them go under, this will have a cascading effect on businesses, unemployment, and then if they don't bail them out, the unemployment rate will go up, which means then will affect the jobs data on non-farm, which means then it will weaken the US dollar, so on and so forth. So there's loads of little things that we have to sort of take into consideration. And speaking of the US dollar, let's have a quick look at the dollar index and see how that has been affected. Now we had a little bit of dollar strength, and similarly, Friday we've had two big selling off days. Now, whether that is affected by what happens with the SVB, I expect it is. But again, is there more downside in this? Are we confident in the US dollar? Are we confident in the banking system? If we are, we buy them up with a 10% discount. If we're not confident and we think there's much more downside and we think bankers are crooks, then there is a potential for us here to be shorting this market. But thank you very much. Have a lovely evening, and I will speak to you next week.